welcome to the show. Today we have with us Mukul Arora of Elevation Capital. Mukul, so good to have you on our show. Now, my first question, as a venture capitalist, lots have changed across the world when it comes to macro. Even US has cut interest rates, which was most watched out for. And on the other hand, our startup world has seen some liquidity crunch, though not at the first level, the seed level.
Right.
How is the scenario looking right now, and how's the investor sentiment?
Sure. Nisha, first of all, thank you so much for having me on the show. Excited to be here and looking forward to our chat.
Thank you.
On your question, let me start top down and let's talk about India macro first.
Yes.
And see there, if we look at last few years, we are in a very, very strong place.
Yes.
The economy continues to do well. It's slowed down a little bit now to mid 6.5% growth rate, but still one of the fastest growing major economies.
Yes.
We have a very stable currency. We have a very stable government. And if we look at capital flows, even though global capital flows into India have gone down, domestic flows are stronger than ever before.
Yes.
So overall, from a macro perspective, India was always in a very, very comfortable place, and we continue to be in that strong position.
That's
so,
right.
So that is good news.
Yes.
If I zoom in a little bit more on the startup ecosystem, there obviously we have gone through different phases over the last 3-4 years. So 2021, we saw the craziness of excess capital being available.
Yes.
and everything that led to, which I'm sure we'll talk more about. And then 2022 saw a very, very sharp deceleration.
Yes.
On the capital supply side. First half of 23, I would say. But if I look at last 12 months, I think from a capital availability perspective for companies across stages, whether it's a seed Series A company or it's a company looking to go public, it has come back. And for high quality companies, there is capital available.
Yes.
Companies continue to grow well, which is very encouraging. And a lot of companies, because of this disciplined environment, have now become profitable, which is the most heartening news.
I think a lot has happened because of their approach towards public market, and the entire startup world, including the VCs, have understood a lot and put a lot of also emphasis on the bottom line. But we'll talk a little more about that.
Yeah.
But first, I wanted to also understand, you invest both in public and private market, and they both have had a very different trajectory over the last 1 year or so. How do you view each side, and where are you focusing more for investment? Exits, we know that you are capitalizing on the public market valuations.
Right.
Yes.
So see, you hinted at it. Public markets valuations have been rich. If you look at last year and a half, there is no doubt about that. Having said that, if I look at just the quality of growth and earnings, that is also very, very strong. Now, from our perspective, if I look at both spectrums, public markets and private, we are much more focused on private market opportunities. And there are a couple of reasons. One, whenever the environment is more disciplined in terms of capital availability, we have seen historically much higher quality companies get built because they are able to raise lesser capital. They are much more focused on product market fit, much more focused on unit economics, and therefore they end up building very, very resilient businesses. Plus, needless to say, even from a valuation and risk reward perspective, that side of the market is much more exciting. So that's where we are disproportionately focused on. It's both seed Series A as well as I would say companies which have proven their business model, which have gotten to a scale which will be somewhere in, let's say, $100 to $500 million valuation range. We are also very actively looking at that segment. And in fact, just in the last 12 months, we have invested in 3 companies in that zone, and we are in the process of closing one more investment. So that is also becoming a very big focus area for us.
So investment and exits, both are going hand in hand for Elevation Capital.
Yeah.
Let's talk about the exits. Of course, Ixigo, First Cry, they gave bumper exits and returns to the investors like yourself. So what does it mean for Elevation Capital? And when it comes to exits and returns, how are you positioned now?
So thankfully for us, we have had a stream of exits over the years, and overall our exit track record has been fairly strong. We started investing in India way back in 2002. And if I look at one of the first, the first NASDAQ IPO of an India tech company, which was Make My Trip way back in 2010, we had led their Series A in 2005. So from those days, or even before that, we were investors in a company called Sifi, which was an internet service provider. They had gone public, did really well for us. So we have been very, very disciplined about exits. And the fundamental reason, and I don't want to blow our own trumpet, but we have invested in very high quality companies, and therefore over the years that has led to a very steady sort of track record of exits. And even now, given markets are in a good place, companies are doing well, they are listing, IPOs have been a good way of getting some exits for us.
Right, but of course the public markets are a phenomena of various aspects and not just the fundamentals.
Of course.
And we are seeing how geopolitics also plays a role there. So Swiggy is the next big IPO from your portfolio.
Yes.
What are the expectations there, and how do you see the intense competition? Because market has never seen a duopoly of this kind of two big companies.
Yeah. So, see, we invested in Swiggy way back in 2015. In their first round, that was the seed round. That time, Harsha was the first founder who came out and said that if you have to solve for food delivery in India, you have to build your own logistics. And today it sounds obvious. We see so many riders on the roads with Swiggy, Zomato, Zepto jackets and bags. But he was the one who had the foresight to say that this is the only way this problem can be solved in India. Before that, there were 50 food delivery companies and none of them had their own logistics. Fast forward to, let's say, 3-4 years back, again, he was the first one to say that, okay, now consumers are used to so much convenience in food delivery. The same thing will happen in grocery and everyday needs, and therefore the next big category is going to be Instamart and quick commerce. And we pioneered that category. Today, it's the fastest growing category. If we look at private market investors, it's by far the most exciting category in those markets. So the reason I'm sharing this is because Harsha and Swiggy is one such company which deeply cares about consumers, and that is what has led to these insights, and that is what has led to these industry defining sort of moves from them over the years. And as they look to go public, there are many more such things in the works, and I'm sure we'll continue to see that as they go public. I'll just add one more minute since you mentioned duopoly. See, I see a very, very strong similarity with Alibaba and Tencent in China, where today, because Swiggy and Zomato have very high overlap in terms of their businesses, it seems like a duopoly, but both companies are run by very, very high quality entrepreneurs. Both are very customer obsessed, and you talk to any consumer in India and tell them which are the top 5 apps or marketplace apps or commerce apps they use, Swiggy and Zomato will be there. So
people use it several times a day. It's not just once a day.
Exactly.
With the grocery thing.
Correct.
So what is the parallel that you're drawing in the duopoly market?
Yes.
What are the lessons?
Correct. So the parallel I was drawing is that we are so early in India in terms of our internet economy growth. And therefore there are two companies which are well loved by customers, which are run by very strong founders, and which are now profitable. And both of those companies, Alibaba, Tencent also, once they became profitable is when they really unlocked their true value. And that when you are profitable, you can actually go into a lot of optionalities. Zomato recently entered into events business. Like I was saying, Swiggy has a lot of things in the works. They just announced a community or an offering for the premium audience in their customer base. They just announced 10-minute food delivery. So both the companies have a lot of things up their sleeve. And therefore 10 years out, both of these will be very valuable companies. They'll still have 30-40% overlap, but they will start to look very different. Just like Alibaba and Tencent today look fairly different, but also compete fiercely in a few segments. So that's how I look at this duopoly.
So Mukul, while we were talking about duopoly, but a lot of intense competition is to be seen between Zomato and Swiggy. And you rightly pointed out, a lot of them have been pioneered by Swiggy's founder. But also you have to see the intense competition from the other competitor, where they have very quickly taken that on and also made a lot of things much more larger and profitable. So I would say that it's not just going to be an intense war between Zomato and Swiggy, but also between Instamart and Blinkit. That's where the value now lies. What's your view on this space?
So, see, you are absolutely right. Credit where it's due, and Zomato plus Blinkit have executed phenomenally well. And in fact, I met Dipinder recently, and he said that over the years, both the companies have brought the best out of each other, which I think he has said publicly as well, which I completely agree with. Just given both of them are so fierce, they have really pushed each other, which has led to the customer offering we have today. Now coming to quick commerce, see there my view is if we look at other geographies again for comparables, and if we compare them to, let's say, grocery chains of the past, you look at markets like US where you will see multiple grocery chains, or you will see multiple pharmacy chains like a CVS, Walgreens, etc. My sense is it will evolve the same way in India, where there will be regionally strong players. I don't think there will be one company which will dominate across the country. And even today we are seeing that. Zomato and Blinkit are much more stronger in NCR, whereas Swiggy is much stronger in many of the other markets, including Bangalore, Hyderabad, Chennai. So my sense is that's how it will play out, where there will be regional dominance. But at an aggregate level, both there's enough and more room, given it's fundamentally it's even today a $600-700 billion market that they are playing in. There is more than enough room for multiple companies to get created there.
All right, so there's more room for more companies to come in this. But talking about consumer tech, Mukul, what are your favorite areas now? Most of the levers have been defined. The market has been explored, and now we know what lies there. So now what is the next step, and what is looking favorite to you in this scenario?
See, that's a great question. And if I look at first wave of companies in India, it was relatively easier. We looked at what was getting built in the US, adapted it to India. If I look at last few years, it's been very bottoms up, very India first insights. Urban Company was an example of that. There is no local services company globally. They are the first one to build it. Misho was an example of that. One of our more recent portfolio companies, Solar Square, is an example of that, where we are seeing rapid adoption of rooftop solar by consumers. And now they are saying that because it's such an unorganized supply, can we build a consumer offering end to end, where we provide the service, we install, we provide after sales service. And where I'm going with this is that my view is now a lot of incremental innovation we'll see in consumer tech will be these bottom-up insights versus saying that, hey, are there these large white spaces that I can go after? And the beauty is when you find such insights, these are not very competitive, unlike food delivery, unlike horizontal commerce. And therefore, you can build it under the radar in a very capital efficient manner, get to profitability much sooner. So those are the sort of very, very bottoms up areas where I think the next set of consumer tech companies are going to get built.
All right. So this is one great space where we need that end-to-end solution, like water filter. Something like this can be put in every household or in every building. That's the vision. But apart from this, which are the areas you are spending most amount of your time on new investments, cherry picking, in which areas?
So I do want to talk about one theme. We are all hearing about the excitement in GenAI LLM across the world. And if I look at investments in the US, last 2 years, 80% plus have happened in this area. So far in India, we haven't seen the same level of startup creation or investment. Having said that, I do feel if we look at the cloud era and the SaaS era, there also we saw valuable companies from India getting built on the application layer. I think within AI also, we are now getting to that stage. And therefore, that is the opportunity I'm most excited about. And even as a firm, one area where we are spending time is to say, hey, which are the lanes or segments where there is a clear structural India advantage. For example, a lot of these AI companies have a big services element also linked to it. And that has always been our strength thanks to IT services. So can India really dominate in AI product plus service type of place? So which are those areas? Can we start companies there? Can we invest in those companies? And hopefully 5, 7, 10 years out, when AI creates trillions of dollars of market cap globally, India can have a very large share of that as well. So that's the area we are very, very excited about and spending a lot of time on.
So AI actually became a household name only in the last 1 year, Mukul, while so much work has been going on over several years. Now, a few investors have given me a feedback that while we have crossed one wave of innovations, the next wave has to come from AI because it's such a big thing across the globe. But there is lack of talent in AI in India and those capabilities or value investment areas. What is your view?
See, I don't agree with the lack of talent part. And there again, I'll break it into two parts. One was this first generation of companies which were getting built on the foundation layer. I agree that talent is not at the same level in India as in the US. But when we look at application layer, there India talent is as good as anywhere in the world. We have probably the best engineers in India globally. And where is it coming from? Again, we were talking about Swiggy and Zomato. The kind of scale at which those companies are operating is larger than anywhere else in the world outside of China. And therefore, those engineers have built systems for that scale, for that complexity. So we have the best technical talent in the world. And just like that talent helped us in that cloud era,
Yes.
it will help us even in this AI application layer. So I'm not worried about availability
You're not
of talent.
worried, but one question to end this discussion, Mukul, is also that another sense that I'm getting is that everybody is focused now on returns. Obviously, the returns are the ones which define your investment, landscape, and
Yeah.
you look at that. But because the public market approach and the exit mechanism there is so focused on profitability as well, so bottom line is becoming very important for the investors.
Yes.
And is that impacting the intensity of innovation in the startup world?
See, I would not say so. So, like you mentioned, there is a lot of focus on bottom line, but that is for companies which are at scale. If I look at seed, series A, there it's all about innovation. At that stage, if you are focusing on bottom line, anyways, you will miss forest for the trees.
Yes.
And this I'm not saying just for elevation. I know other funds also, we are seeing the kind of companies which are getting backed. Lot of innovative startups are getting invested in. I'll give you again one example of a company called PeerSight, which is building in the space tech space. And this was one of our investments. Overall, that space has seen a lot of excitement. So early stage, lot of innovation is happening and there is enough and more capital available for that. And that's where focus should be. A seed or series A company should not be thinking about bottom line. And we are not thinking about bottom line at that stage.
All right, more innovation and more startups being created, backed by the VCs like yourself. Thank you so much, Mukul, for joining us right here.